T-Mobile is a wireless network operator and the second largest wireless carrier in the U.S. It's gotten this big by enhancing its network and implementing creative marketing strategies. The company has a workforce of about 71,000 and a customer count of just under 115 million. However, the stock has been excluded from this year's rally and is down by about 5%. And this is partially because it hasn't been plain sailing. Recent revenue fell by 2.4% year over year. T-Mobile had better luck on the bottom line as earnings per share did beat Wall Street estimates. What is notable is that billionaires Warren Buffett and Ken Griffin have been both using these low prices to pick up shares. Buffett now owns shares worth about $705 million, while Griffin owns shares worth about $675 million. Also interesting is that Timothy Horan of Oppenheimer has an outperform buy rating on the stock and a $190 per share price target. Let's look, but as usual, conduct your due diligence. And this is the monthly chart on T-Mobile. The symbol in the upper left, as you can see, is TMUS. And for disclosure purposes, I do not hold any shares of T-Mobile at this time. But as you can see, back here from 2013 all the way to the current time frame, we have a pretty decent run on the way up. Even with these downturns, say there in 2021 to 2022, and then the current downtrend. Regardless of those downtrends, we seem to have a pretty good step pattern on the way up. It's not perfect, but I think you can see what I'm looking at. Into volume is fine. Now here to the MAC, and this is what is interesting, is from that top in 2021 down to the bottom here, it was pretty steep. But this move from this bottom here looks to be relatively short with the perspective of the MACD, but you go back up to the price chart, that was a healthy run. Now, the downturn, pretty much the same. The downturn has been relatively short in the price chart, and then here in the MACD, it's been also short as well. We are above that zero level, so we have some strength in the chart. And that's what I'm keying on. I'm looking at this downturn in the fast line in black and the slow line in red. I'd like to see a bottoming and basing coming in this area here, but still above that zero line. So you have several months before we do hit bottom, maybe even more. So you're ahead looking at this chart right now, and you have plenty of time to conduct your due diligence. But this stock has not participated in the rally, yet that price chart looks pretty good. Let's move on down here into the histogram. Pretty much the same thing. You can see that the dive it took here, we're nowhere near that, not even half. So keep your eye on that. We may get to half, but I would imagine that we are going to bottom and base well above this level here. So it'll start improving, I think, within the next few months. And you can see pretty much the same thing in the price rate of change there. The relative strength index, it's at a moderate 46.88, and yet you can still see improvement there as long as we bottom and base in this area. It's near that 50 or midline, so there is strength. Now the stochastics, as well as the Williams, are heading on down. We'll see where they go. The Williams may get into that oversold territory, and that would be fine. But it's the rebound that I'm looking for. So back up here to the price chart. One last look at the price chart. Once we get that rebound, hopefully in this area above 125, perhaps even a little bit higher, it should have another nice step up move. Again, following that basing and bottoming. And once again, you have several months to follow this and conduct your due diligence because the risk is all yours. ChewDog out.